So Tesla's latest numbers are in for 2025. And honestly, they're making everyone ask a really fundamental question. What is Tesla now? Really? Is it a car company, a tech company, an energy company? The answer isn't so simple anymore, and it's completely redefining the company's future. Let's break it down.
For the first time ever, Tesla's annual revenue actually went down. Yeah, in 2025, it dropped by 3%, falling from $97.7 billion to $94.8 billion. Now, for a company whose entire identity is built on just relentless explosive growth, any step backward is, well, it's a very big deal.
And that, of course, begs the one question that's on every investor's and driver's mind. Is this it? Is Tesla's incredible, market-shattering era of growth officially over? Well, to answer that, we have to look way deeper than just the number of cars they sold.
See, to figure out where Tesla's headed, you've got to understand why it was never really just a car company in the first place. Its whole DNA, its entire structure is just fundamentally different from everybody else.
And it really all boils down to this one key idea: vertical integration. It sounds like a fancy business school term, but it's actually a pretty simple and powerful concept. Control your own destiny. While other car companies are juggling this incredibly complex web of outside suppliers, Tesla builds the most critical parts of its cars and its business itself.
And here's what that actually looks like. Tesla is in the game from the absolute beginning, starting with the raw materials. Those materials head to their own gigafactories, get turned into their own battery cells, which then go into cars assembled in their own factories, which are then shipped directly to you, the customer. This gives them an unbelievable amount of control over costs and, maybe more importantly, the speed of innovation. I mean, when you design the chip, the battery, and the software all together, you can make changes almost instantly. That's a process that takes traditional automakers years to navigate with all their different suppliers.
And that control, it goes all the way to how you actually buy the car. You're not going to some third-party dealership. Nope. You order online, or you visit a showroom that Tesla itself owns and runs. This direct link to the customer is a massive disruption, and it has caused all sorts of legal battles, like the big lawsuit in Louisiana that Tesla finally settled in 2025, which challenged the state's ban on them selling cars directly.
Okay, so here's the real kicker. Every single Tesla driving on the road is basically a data-gathering machine. With a fleet of over 6 million vehicles, they're not just testing their full self-driving software in some lab. As they say right here, they're training it on billions with a B of miles of actual, real-world driving data. And they're constantly pushing out improvements through over-the-air updates. It's a data advantage it's almost impossible for anyone else to catch up to.
All right, so if the car side of things is so strong, so different, then why the dip in revenue? Well, it's because that 2025 slowdown is actually forcing a huge strategic pivot. Tesla is now doubling down on the other parts of its business, making a massive bet that its future lies in software and energy.
If you look at the revenue breakdown from 2024, you can see what I mean. Yeah, car sales are the huge slice of the pie, no doubt, at 73%. But look at these other pieces. Energy and storage is already 14%, and services and software is another 13%. We're not talking about side projects here. These are already multi-billion-dollar businesses on their own.
This timeline of their profit, wow, it really tells the whole story, doesn't it? You can see the years of losing money, then that huge breakthrough into profit in 2020, and then that unbelievable peak in 2022 at over $12 billion. The drop to under $4 billion by 2025? That clearly shows that the hypergrowth phase has, for now, definitely cooled off, and it's forcing them to adapt.
So how did they even get profitable in the first place? Well, a massive part of their early story was something called regulatory credits. Think of it this way. Governments required car companies to sell a certain number of electric vehicles. Since Tesla only sold EVs, they had a surplus of these green credits, so they could sell them to the old-school, gas-guzzling car makers for pure profit. Back in 2020, this was a staggering 90% of their profit. Today, that money is just a tiny fraction of their revenue. Tesla is now a business that truly has to stand on its own 2 feet.
But, and this is a big but, this whole pivot into software and energy is not a sure thing. The company is facing some really serious roadblocks, and they basically fall into 3 buckets: regulations, competition, and of course the X factor that is its CEO.
Just take a look at this comparison. It's pretty eye-opening. You've got competitors like China's BYD and Volvo, and they are closing the gap fast. They're offering cars with nearly identical range and fantastic performance, but often at a much lower price. Sure, Tesla still has a huge lead with its subscription-based full self-driving software, but the advantage they had in just the basic hardware? Well, it's not what it used to be.
And those headwinds are getting stronger.
Regulators are taking a much closer look at self-driving tech, with the U.S. Safety Agency upgrading its investigation into FSD-related crashes in 2026. The gigafactories cost a fortune to build and scale up. The EV market is just getting plain crowded. And of course, so much of Tesla's stock price and its vision is tied directly to Elon Musk, which can be both a huge asset and a pretty significant risk.
So all of this brings us right back to where we started. When we look at Tesla right now and into the future, what are we really looking at? Is it a product or is it a vision?
So, here's the billion-dollar question. Is Tesla just a car company whose value has been pumped up by a tech bubble that's finally starting to lose air? Or is it a true AI, software, and energy company that just happens to be hitting a temporary speed bump in one of its business lines? The answer to that question is going to define not just the next year for Tesla, but the next decade.